welcome to the Elliott Wave Forecast intraday video day. Guys, we're going to take a look at the euro dollar. It's been a huge set-off in the euro since Sunday, and the way structure right here looks suspicious to me to be to the downside. In other words, we still keep the same idea that the euro in the 4-hour and 8-hour chart is within a corrective move that started at 142 and we believe is coming to the end pretty soon. Now, how do we see the euro from there? The first that we need to know is count the number of swings when we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 swing. 11 swing in a structure is correcting by nature, so technically speaking, the euro is in a corrective structure. For more that you want to count this structure as an impulse, it's very hard. And I want everyone to understand that the decline in the euro do not need to be an impulse to the downside. It needs more to be a corrective move, and then consequently from there, technically speaking, do not need to be an impulse of 5 ways. That doesn't mean that the euro is gonna fall. Yes, the euro is gonna fall like everyone wants. But technically speaking, I believe that we are very close to a bounce. Now, in Elliott waves, in the market, everyone knows that the market are flutter. In other words, the market runs in waves. That's why you see different ways, and you see ups and downs within the market, and then you guys need to think what create those up and downs. They are created by Fibonacci levels, because the machines of the big money guys, of the technical guys, buy and sell in Fibonacci levels, right? Having said that, as a waver, I always try to find the reason at every highs and lows within the market. And then I start playing today after the forum a little bit with the euro dollar, and I draw this conclusion. First, this is an 11 swing corrective move, and this move is about to end or ended at 130.06 area, and it's gonna bounce in 3 ways. I don't need to say that that's very where we were expecting with it, most of the pairs to be bullish, including S&P, Aussie yen, Aussie dollar, dollar CAD. Everything one way or the other is bullish. So in some degrees, it's very nice to expect a type of bounce also in the euro dollar. Now, how we laboring? We're laboring as a triple zigzag. A triple zigzag is a structure that runs with this laboring for the new guys right there. This is a triple zigzag. A triple zigzag runs like this. 1, 2, 3, a correction of the whole move. 1, 2, 3, a correction of the whole move, and another 1, 2, 3. Now, let's see if this structure can be seen from here to here. And then in a zigzag, everyone knows that these two legs, they're equal, and this is part of the 618 or 76 of the whole move. Also, this can be 1.2036 or 618 of A. We're going to start with the first leg. That's the first swing right there. All right? 3 backs, and guess what? Another swing. Let's see if those 2 swings, they are corrective. Look, They are corrective. They are related to the 618. This swing right there is the 618 of this swing. All right? So we have A, B, Z. This is W. And then you have a reaction back. This is S. And then from there, we have possible A, B, and Z. Now, let's see if these two swings, they're related. A equal X to the C. So, very interesting. And then this one also, it goes to the 76.4 to the pit of the first one. So, how many swings do you have from here to here? You have 1, 2, 3, 4, 5, 6, 7. That's a double zigzag. What we were saying around Thanksgiving Day, that the euro is going to recover. What the euro did is recovering. Now, the recovery proved to be corrective. Now, we go higher and we see why this high is. In the double zigzag, this high needs to relate to this one. It went to the 50% back. Interesting. Now, there was a debate if this is a nest. I can prove to anybody that this is not a nest. If it's not a nest, what it is? We draw the conclusion that this is A, B, C, D, E. A euro did a running contracted triangle here, and then what we have seen this week is a trust for the triangle. When are these two ways, are these two related? Wait to see. These two are related to the pit. That's why the euro bottomed are there. Now, why do I drop that conclusion? Let's put the RSI on it. Look at the RSI. The RSI is a sequence of highs and lows that comes from 1, 2, 3, 4, 5, 6, 7, right? 8 and 9. I want you to look that there is no divergence from here to here in the RSI. Now, let's move on now a little bit to the 1 hour chart, right? Into the same labeling. This morning, we were expecting, let me adjust the charts a little bit for you guys. This morning, what we're saying was that the euro is going to bounce and it's going to make a low. Exactly. That's exactly what it did. But I don't think that was what we are expecting. Look, if you take a look at this structure from here, you can make the case for the triangle. 1, 2, 3, 4, 5. If you guys recall last week, this move was in 7 ways. 1, 2, 3, W, S. Everything was clear. A, B, C, Y. Perfect move. Perfect move right there. The 2 legs to the 76.4. Perfect move. Now, this is a 3-way move. Look, the high is the high. And this move, correct, and I want you guys to look at this. Look at the Fibonacci relationship. 76.4 right there. The low, this is A. B, 76.4 of A. Then you got E to the 50% or 618 of the proposal B. Then you have right here 76.4 in D, and you have 50 back in the C. This is a contracted running triangle, and most that everything from here, which is the trust for the triangle, you have 2 series of 5 waves were defined to the equal legs, and that's why the market bottom at that level 30.03, because this lead is equal to this. This is a 5-way swing. This is a 5-way swing. The market erased the divergence. And I tell you guys, with a higher degree, I believe that the risk trade have found the bottom. A risk-off trade. Now, in validation of everything, if the market goes about 132.37, the market should trade higher. Now, where do we stand overall? Let's get back a little bit to the 4-hour chart. What do we have? The market took this level right here, which is the 131. Let me take the RSI out. The market took the 131.43 October low, which means that there is only a flat can make the case for this S to expand it a little bit here, but that's the least of the concern. In my favorite count, we believe that this is W, this is S, and the market ended today the W or lesser degree when he's going to go 3 ways back to correct that W to a level around 136.28. That makes the case for the S&P to trade higher, and then the market is going to reverse lower into another set-off that is going to take the euro to 124. Hope you guys understand. I mean, this is the count that I like the most. Let's see if the count is correct. Thank you.